Hi, and welcome to the podcast channel, podcastmybusiness.com.au. And also for video, we have contentmadeeasy.com.au. And we'll welcome back Karan Anand from Hnry.com.au. That's Hnry.
Hey Tony, how you going? Good to be back on the show.
Thank you for coming back. And we've been getting you back quite a bit because it's very interesting about sole traders. Sole traders don't get a lot of advice necessarily, and they don't know everything that's going on in the world because they're too busy in their own bloody business.
Yeah, that's true. Absolutely. And, they also fly under the radar. They don't have big advocacy organizations that are
Yeah,
fighting for them as well. And so
yeah.
they're not in the public discourse. And then if you're not in the public discourse, you don't really get a mention and you don't really get policy directed at you.
And of course, it's a large part of the economy is sole traders.
Yeah, that's right. I think the ABS estimates that independent earners, that category of people who work for themselves, is about 60 to 70% of all small businesses. So around 1.7 million Australians are earning independently, which is a huge chunk of our
Mm,
workforce.
mm. Absolutely. And as we've mentioned before, thanks to COVID, a lot of those businesses aren't the micro businesses that go to just sell at the markets. They're actually real legit businesses.
Yeah, exactly. They are. They are. Things like shocks like COVID and other economic shocks are actually the impetus for people to try out. Well, actually, I out of necessity, I've got to go and earn income from somewhere else, and they fall in love with it, and they go, like if I can pull it off, what's better than being your own boss? You know this well, Tony.
Yeah, absolutely. Yeah, it's so true. I started up almost 11 years ago. I'm lucky the clients that started with me all that time ago are still with me all this time later.
That's awesome. Credit to you and credit to the service you
Thank you.
provide.
Yeah. I don't talk about it enough, but I'm very, very fortunate, and I started off very well. I'm very, very lucky. But one of the things about being a sole trader is you don't have to put in your own superannuation.
Yeah, so it's an interesting thing, right? So if we dwell on superannuation, there's um, obviously when you're an employee, you have a compulsory contribution made by your employer, and I think the superannuation reforms, which came in the early 90s, were possibly some of the most significant financial reforms that have been made in Australia in the last generation. And they've really helped us sort of stave off some of the challenges other Western economies are facing with an aging workforce and a retiring population that they don't know how they're going to fund pension schemes for. So credit to the government 30 plus years ago for instituting those reforms. You're right in that the majority of sole traders don't have to make contributions to super and therefore don't. There is, however, um, in the Superannuation Act, which was updated through the closing the reforms loopholes a couple of years ago, a lot of sole traders are eligible for super if they provide services primarily for their labour. Now, it's a classic tree in the woods fallacy where, whilst that may be legally true, if the sole trader themselves doesn't know that this is the reality, and the contracting organization or the employer, whatever you want to call them, the person using the sole trader or the contractor for their services, if they don't know about this, then it doesn't get paid. And so, whether or not this has been legislated or not, in the end, what's the net result? It's what you described at the start. Sole traders don't get paid super, and we can get into what the long-term implications of that are.
Yeah, exactly. I mean, there are implications for that, and we're also mentioning about other ways you can financially do better. I would say a large number of sole traders have property, have their own property, and what have you. So you can put money into your mortgage via different accounts and whatever. So that's also a tax benefit. But I guess we're not okay. Let's be clear. We're not giving away financial advice. We're
That's
not
right.
offering financial advice. If this is a general discussion. If you need specific advice, go see a financial advisor or accountant.
And endorse that. So let's get that one out of the way.
You know, so you got to be careful these days. If you don't forget to do something, then someone will. I don't know what way that happens, but anyway. So cool. All right. So there are different strategies, and I guess a lot of that is minimizing, or I would say, reducing the amount of tax that you're paying on the money that you're earning.
Yeah, absolutely. And there's two parts to it, right? So there's the let's maybe there's three parts to it. So one is the concept of saving for your retirement and long-term wealth creation, which the superannuation industry has done a fantastic job of for millions of Australians. The second part, which is particularly the hard part when it's a voluntary contribution, as it is for most sole traders, is the discipline required to access wealth creation. So for those of us who are employed, you can't touch your super unless there's extenuating circumstances. And so it goes off, like for most people in their 20s, 30s, 40s, even into their early 50s, they wouldn't even know what their super balance is. They wouldn't even touch it. And then once you get into the 60s, where you get to the age where you can access your super and you're thinking about retirement, hopefully you've built up a nice nest egg for yourself and you get a pleasant surprise. So that discipline is taken away from you, but it's taken away in a good way. The third part is the tax part as well. And I think to your earlier point around benefits from a saving, putting your money into property, for example, recent budget changes have made property a less lucrative investment. So removal of negative gearing going forward for prospective investors, but the institution of a higher capital gains tax rate means super from a tax perspective becomes an even more lucrative asset class. And for those of your listeners who don't know, if you make a contribution up until the concessional cap, which is 30K every year, so it's a reasonable amount of money if you think about 30K compounding annualized over the course of 25, 30, 35 years, it could be a lot of money. You're only taxed at 15% up to 30K. And so if you are a sole trader who's making no contributions to super or making small contributions to super, if you have the funds available and you can find a way to make that disciplined weekly, fortnightly, monthly contribution, you'll only get taxed 15% up until 30K, which is a huge tax arbitrage, particularly if you're either at or knocking on the top tax bracket, which is 47%.
Absolutely, and anything you can do to drive that down. Look, everyone's going to pay tax. We've discussed this before. Paying more tax isn't a bad thing. It means you're doing better. Um, so, what are the other benefits, I guess, of doing it that way?
So apart from the tax thing is obviously um, the superannuation industry is at a stage of maturity now that um, they've got there's enough competition in the market and enough flexibility that you've got to essentially choose your own adventure. So there's so many funds available for you to choose from, and then obviously depending on your own risk appetite. So again, not financial advice, but typically someone who's younger would take a more aggressive strategy. Someone who's older would take a more conservative strategy. But the actual day-to-day investing is taken out of your hands, and so you're not picking stocks, which generally, if you're not a professional, can be a fool's errand. And then on the other hand, if you've got a professional looking after it, they're looking like superannuation funds over the long term are returning 6 to 10% on an annualized basis to their investors. And so having a strategy in place, which is, I can set aside an amount of money. I've got the discipline to allocate that money on a periodic basis, let's say hypothetically monthly, and I know that up to 30K, I get a really, really large tax arbitrage or tax concession from it. You sort of sit back and go, there's actually a really nice long-term wealth creation opportunity that the Australian economic system has created for everybody, including sole traders. It's just the burden is on you to actually take the step and put that system in place.
Well, and your latest survey showed that 41% of sole traders do not make superannuation contributions.
Yeah, well, it's actually about 50% are not making contributions, and 41% are actually looking to delay contributions. And the last time we asked this question was in 2023, and it was still about half of sole traders weren't making contributions, but it was only 24% were looking to delay contributions because if this cost of living crisis dates back to 2023 when interest rates started increasing at a rapid rate, and we had the knock-on effects from supply chain issues on the back of COVID. but obviously we're facing a different set of challenges now. So the cost of living challenges are continued, but now obviously exacerbated by the fuel crisis and interest rates at sort of record levels, at least for the last 15 or 20 years. And so a lot of our demographic that we serve, sole traders, but broadly Australians are doing it tough. And so you sort of look back and you go, what are the things I can cut? And unfortunately, long-term savings, superannuation are amongst the first thing that's cut, which is, I do need to borrow for my future in order to fund my present, which is a sad state of affairs. But it's the reality of the economic environment we're living in now.
Yeah, absolutely it is. And when we're talking about superannuation, I say to people, look, always check, just do it annually, just have a look at your superannuation, make sure it's growing. Now, I was in a superannuation fund. I'm thankful I've moved. Um, the ATO awarded the worst superannuation fund, and I was checking. Yeah, it's really weird. I was checking my growth. Okay, my growth was going well. Um, it had this thing about fees and charges on the front document. However, it had other fees and charges buried that I didn't know about.
Terrible.
Like, there's so many fees and charges there could be up to half a dozen
Yeah.
fees and charges in superannuation fund.
Yeah, yeah, and I think you've hit on an important issue there, and we'll give credit where it's due. I think APRA, who's our prudential regulator, has actually done a really good job in the last few years on increasing the scrutiny on superannuation funds who charge higher fees and superannuation funds who are underperforming. And they publish on an annual basis a traffic light analysis of performance across a number of categories. But simplistically, what are you looking for? You're looking for good returns and low fees.
Yep.
And then superannuation funds typically they tack on life and some sort of life insurance across
Yes.
all policies. So it's also
Yep.
the cost of life and the coverage that's available. God forbid that you have to access that life insurance, um, and they act on this stuff as well. So they punish underperforming funds. And one thing I think they've done, commendably over the last few years is large scale investment, capital investment, which is what superannuation is. It requires scale. You get fee benefits from scale, and so where you've got subscale funds, they're going to necessarily charge higher fees just because they've got fixed costs and they've got less members to spread them over, and so they've gone about forcing funds to merge in order to drive down costs, which is fundamentally a good thing because ultimately the beneficiaries of them are the customers or the members of the fund. So you give credit where it's due, but it's in response to things like you finding out that you've got hidden fees and charges, and you're like, actually, what is my actual ROI on this investment? You can give me the headline return rate, but is it net of all fees or is it just net of the fees you chose for it to be net of? Which I think now the transparency in the system is much better, that your returns are net of all fees, hidden, invisible, visible, or whatever they are.
Yeah, and I'll say that was Bankers Trust. So if anyone's still in Bankers Trust and to do with them, get out.
No, no, no comment from me.
I don't think they do it anymore anyway. I think they did get APRA'd. So you do have a special service to help make superannuation contribution.
Yeah, so one observation that we've made is that there's a confluence of things happening which are hitting the market 1 July. So the first thing, which may not be known to many people unless you're in the small business system, is the closure of this thing called the Small Business Superannuation Clearinghouse, which was a government-run service run by the ATO, essentially allowing small businesses to make superannuation contributions directly if they're a business that met certain criteria, basically turning over less than 10 million and less than X staff. And the government's decided, look, we shouldn't be in the business of providing this as a private sector service. And actually, they're right. Where the private sector has got better alternatives, the government should be getting out of it. And the reason is because the clearinghouse industry is quite mature. The challenge is, again, like many of these policies, they are taking the view as it pertains to the employer-employee relationship, because typically super is just stapled on as part of a payroll system, and most payroll systems are quite mature enough to say, look, employee earns X amount of dollars, you add on 12%, it goes through a standard payroll process, and the payroll software we'll separate the payment out into here's the amount that goes to the clearinghouse for superannuation purposes, here's the amount that goes to the ATO for tax, here's the amount that goes to the employee as salary. Um, when there's a contractor, lots of typical employee payroll systems will go, but there's no underlying tax payment because they may not be a PAYG earner for the purposes of tax purposes. And I may just make them a bank transfer, so it doesn't need to go through the payroll system, but I still need to make a superannuation contribution because we are engaging them for their services. And under the existing Superannuation Guarantee Act and reforms made in the last couple of years, we have to make a superannuation contribution for them. And so typically, previously, they would have used the small business clearinghouse for this. Now they can't, or they have to find sort of caveats and loopholes or different classifications in existing payroll software, which is confusing and can be expensive to do. And so, and then the third thing that sort of, or the other thing that contributes to this is the advent of payday super, which is coming in. And
Mm.
so this may only have been a headache for you once a quarter because that's when you're obliged to pay super. Now it's going to be a headache for you every time you make a payment. With contractors, you make payments sometimes more sporadically, sometimes more frequently than you would for employees. You might only pay an employee once a month, for example. You may have an arrangement to pay a contractor every time they either finish a shift or on a weekly basis, in which case you've got to solve this super problem more frequently. So observing these problems, we actually had inbound interest from contracting organizations who approached us saying, hey, the clearinghouse is closing. We're now going to have a pay and we're going to have a payday super obligation. What are you guys doing as the the financial admin platform for sole traders? What are you doing to solve this problem? When we sort of stepped back and said, look, our our proposition has been directed to the sole trader, not to the businesses paying them. But it's clearly that there's a clear market failure here. And so we put our heads together over the last few months and we've developed this offering called ContractorSuper, which is essentially just a simple way for businesses who have got contractors that they need to pay, companies who've got contractors that they need to pay super for. It's a simple way for you to set up the instructions in the ContractorSuper by Hnry portal. Send us a file with the details, which we create a template for you for, and then make one single payment, and then we distribute that payment through a clearinghouse into the relevant superannuation funds. And so it's us stepping in, where again the market has gone, hey, we're solving a problem for the industry here, and for the record, we believe payday super is a fantastic thing. I think you should be getting your super alongside your pay because you get the
Yep.
compounding benefits for it. But what we
Yep.
don't want is what happens in the classic design of a lot of systems, particularly the superannuation system. Sole traders are just an afterthought or they get left behind. No one's actually thought about, well, over the long term, if employee super is going to get compounded over 20, 30, 40 years, the delta between their contributions and sole traders' contributions is actually going to get even larger because sole traders' contributions aren't being made. And so this is us stepping into the void. And so we invite anyone who's listening to this who'd want to partner with us to make those contributions to their sole trader customers. Feel free to get in touch with us.
Yeah, look, it's a great idea and a great service, and yeah, sole traders again get left behind. You got to do everything yourself, or have a good accountant, or good financial controller, or financial.
Yep.
But yeah,
Or Henry Tony would be.
or Henry, so, or Henry. So
Yeah.
let me say Henry at the top.
Yeah, I appreciate that. Thanks.
Henry's first.
But yeah,
Yeah,
you're right. You've hit the nail on the head there. Where um, it is you've got, unfortunately, in a lot of instances the system, it's not gunning against you. It just doesn't recognize you. And when you've got a system that doesn't recognize you, you have to do the heavy lifting as well. And my God, Australia's tax system is complex.
yeah,
So even the same way that I described those concessional contributions a few minutes ago, for you to actually access that 15% tax rate, unlike an employee who gets it automatically calculated by the super fund for them, you have to go and submit a notice of intent to claim form at the end of the year. And if you don't, the fund will not recognize those as voluntary contributions going towards your concessional cap, and they'll just get taxed at the marginal tax rate. And so it's, again, it's another step that a sole trader has to take that an employee has doesn't have to take. But who would know that? Like who knows about notice of intent to claim forms?
I know that
Uh,
now. That's right.
like
Yeah.
unless
Yeah.
you're in the game, you don't know it. And
Well, of course you don't. And you got that's why you need advisors and
yeah,
what have you
yeah,
that do all that for you.
yeah,
But
yeah,
a smart person will find out for themselves as well
yeah,
and
yeah.
get to know all these sort of things. Look, it really is very, very confusing. And I use an example of you go to the accountant, and the accountant knows how much interest you've earned, and so does the ATO before you do.
Yes, yes, they do. Yes,
Like,
yeah,
huh?
yeah. To, to that's probably a good thing. But the challenge is when you don't know what you had an assumption that you were doing the right thing, but the system required another step which you didn't know, and the system penalizes you for it. And as is the way some of our systems work is you can't then go and change because they'll just turn around and go, well, you did it wrong. And who are you to go and argue
Yeah,
with
it's your
the
fault for not
authorities
knowing.
that be it's your fault for not knowing exactly
Yeah,
right.
yeah,
Um, and some of these things, they're not even marginal things. The difference between getting pinged on a 15% tax bill versus a 35 or a 30 or a 47% tax bill, it's huge.
yeah, yeah,
It's a
absolutely.
yeah.
Yeah.
And multiply that over 20, compound it over 20, 30 years, it's a lot of money. So yeah, you're right. You're right on the point around having the right advisors around you. Then comes the cost of advice, which in and of itself in this market is challenging.
Well, that's always the thing, and I in business, it's not you that's the smart one necessarily. It's the people who are around you that you have to have that are smart.
Absolutely, absolutely. Yep.
Yeah. All right. Cool, Karan. Thank you very much for that.
No worries. Thanks again, Tony.
Thanks. Yeah.